Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, August 7th, 2022. First, I apologize for the lateness of this update. I had a couple of things going on today, and so I apologize for the lateness, but here we are. I'm going to leave this as an Elliott wave update versus a podcast. I had attempted to try to do that earlier today and ran into some health deals going on within my family and just had to break away and go deal with a couple of things. Now I'm back. Let's keep it up as just an update. I'm not going to go into great depth, but I can at least update the situation, what I'm looking at and where I think we are. So let's get started. Here, I'm starting on the weekly chart. First thing I want to show you, I'm running both counts side by side. So all the internal count is to the alternate view that I have, which is that we are still within the intermediate C wave down, and that we're likely either have completed or are very close to completing the minor wave 2. To update the other count, what that would suggest, if we're completing here, is that, again, the other alternate count shows that the intermediate C wave is complete and the primary A wave. They're in parentheses. That's the alternate. Parentheses, the alternate. Being that it's still an ABC, what this indication is showing you that it would be a minor degree C wave. So that makes that a minor degree A and minor degree B. Since both were C waves, but within this count, it's minor 2 completing, and that it's in a minute wave C. So a little bit different in degree. But on the other alternate, what would be finishing here is the minor wave C and an intermediate A wave for the primary B wave. I think that's coming in short, but I'm putting it there. Now, I am now going to be working together here with the count that shows that the intermediate C wave is still in play, and we're getting ready to make a larger turn. Now, when this larger turn becomes apparent and begins, then we're going to have to do pretty much the same thing we're doing here, sit out and see how far it comes down. So what I can say on a weekly chart, and then again on the daily chart, is, in fact, I'll just go down to the daily, that what we're looking at is a possible turn in the market, turn lower. And then again, we'll move from upside back to a downside. Now, again, in my view, the trend is down. The larger trend is down. So I considered all of this a counter trend rally. Once the trend picks back up, I would expect in turn the speed, the depth, and the force of this next wave down to be much stronger than these rallies were. So I would then expect, so again, let me make clear what I expect to see, or what I would like to see, what the market needs to do to convince me that we're in this minor third wave, is it needs to break below the 4. That's the daily 4, the daily 8, the daily 20, the daily 50s. And it needs to do that pretty dang quick. Now, to get below the daily 50 SMA, it's just breaking 12,200. It wasn't that long ago we were there. That's all within the month of August. I believe, is it? No. Sorry, take that back. So the end of July. So it's not like we're dropping out of the sky, but that's just to announce that this move is done. We're on to the next move. How do you want to chart it? What do you want to call it? That's what will take place. So right now, because I've got this one sitting front and center, I would say that we're in a minor third wave. What that minor third wave tells us is that as a third wave, it is most often the longest and the strongest out of the impulse move out of waves 1, 3, and 5. Right? So we're in wave 3. So number one, I would definitively be looking, if it is a minor third wave, I would be looking for it to break below 11,068 for certain. That would be an absolute requirement. Wave 3 has to take out the low of wave 1. It has to. Otherwise, it's not a third wave. So, having said that, right now, I'm going to go down to the 4-hour chart yet again and open this up a little bit so we can see what we got going on. This 5 is actually here. Now, that little tiny high came in on Thursday to Friday's Globex. So it's the Globex high, but it was a new high, and right off of it, rejection. Granted, that was the employment situation number that was revealed on Friday, and boom, market rejected it. But boom, we did another run-up expiration Friday rally. And then market came down, but it closed. Now we had the after hours came in and they sold the market back down. Today we come in and we had a spike high. Interesting, very, very interesting. That was totally 100% rejected. The market got almost up to, let me go down one more and we'll see what that high looks like. That high is 13,293. Actually, it was 289, I think, something like that. What is it? 292, 13,292. That's where the market went on the opening today in Globex. It was amazing because we closed at 13,226, 126, 126, I think. No, somewhere in there. It ran up and was instantaneously rejected, and then went down over $100 within a minute. It was very impressive. So, having said all that, if I'm counting here, this is the 4. There's 1, there's 2, 1, 2, 3, 4, 5, 3, 4, 5. This is too deep now. So that's why I've got that marked. The 5 would be there, the C, and the 2. So what I am now looking for is for the market to continue to move lower. Now, what could this be? 1, 2. You know, this is still kind of garbagey in my mind. Piddling around between moving averages on the 1-hour chart. We got the 50 EMA and now the 50 SMA pretty flat. And the 20 coasting lower, getting ready to break below the 50. That'll bring in another round of selling should it occur. But I now am looking for the market to build to the downside. This is all a little bit strange, so we needed to clear itself up. So I'm going to give it that opportunity. But in the meantime, I will be prudent and I will say that we need to leave open the potential for the market to make another run for the roses. And that will bring us back out to where we have on, where was it? The 4-hour chart, I think it is. Ooh, no. Hold on, I gotta find it. I have a chart that's got like, or it's just, excuse me, it was nothing more than just resistance at 13,476. I do remember the number. I just remember what it was. So we have 13,476, and I'm going to leave open the potential that the market might just go up there and give it an old shot and then be done and then roll over. Otherwise, we roll over from current levels and start producing the next stronger sequence down. So if anything, this is 1, and this is all just being a 2 in here. And that eventually it's going to finish, and then we'll start more earnestly dropping. So that's kind of what I'm looking for in the NASDAQ. We got an upside and we've got a downside picture. All will play out tomorrow. Again, I want to re-emphasize, took me a long time to get here, folks, but to be able to move in and trade the market without a bullish or bearish bias, because this is how we all learned. This is how we come into investing. You have a bullish opinion or you have a bearish opinion, and that's what makes the market. And so old habits die hard, but I do not try to attach a bullish or bearish picture to what the market is doing. And the reason is because it's quantitatively traded. In 2022, it's quantitatively traded, period. That's all that's really out there. That's what's in force. Algorithms, algorithms, and more algorithms. So to try to determine, why is Apple going up? Why is this stock going down? Why is that happening? Why is this happening? Anybody's guess. Again, I'm going to make it clear. I'm of the opinion there are enough hotspots going on in the globe, going on in our country, that could force this market in any and all directions. You got pundits who will spell out. You've got big banks now coming out and saying, oh, yeah, that was the bottom. This is all bullish. We're all bullish now. But they couldn't possibly back it up with fact. They'll make it up, but let's be honest. I challenge every last one of us, go look at the bond results, the auction results, the treasury bills. They continue to walk higher, all the way up. Now, this week, by the way, will become very interesting because we do have some reports coming out on Thursday, all the way down. We get the 30-year bond auction. We got the 20-year bond announcement. We've got the 30-year tips. We got a lot of the long end of the curve. And we have an inverted curve. Long end of the curve, rates are going down a little bit. Short end of the curve, rates are still going up strongly. I think that will ultimately correct itself. But I don't read too much into it right now. So right now, inflation is still hitting hard. And we have CPI on Wednesday, PPI on Thursday. And that will tell us a whole lot more. Earnings, now we still have some coming out. In fact, the only one that I'm really going to be interested in is NVIDIA, and that doesn't come out until August the 24th. So that's the next one that I think would have some power. All of our big players are out. And so we got that to deal with. One other thing that I'm going to toss in here that the market's going to have to deal with, and hopefully they'll interpret it correctly, is that I do think that it's likely bullish news that the Congress has finally passed a major agenda program from the president, and that is the infrastructure, climate change, and then there's some taxation in there. But that ultimately, once it's all passed, it's cut into law, and then all the money has been appropriated, that is going to put a lot of people back to work, and it's going to put them back to work in high-paying jobs that is going to last them. So yes, that is bullish. But guess what? Here is the negative part of it, and this is what will affect our market versus the middle class getting back to work. They're going to pay for all of these packages, or a great portion of it, by a taxation, and they're going to tax at a higher rate corporate America and those within it. So that, for our market, in my opinion, is going to be more of a negative. I do see that hitting the market because Apple, Amazon, AMD, Google, they've all made tons of money because they don't pay a great deal in taxes. Now that they have to, they're not going to be able to show such high valuations, high return, because they're going to be paying more to keep the country going and not feeding shareholders and corporate level. Now, call it what you want. It's A-okay. But I think that the market will have to factor that in, and that'll be coming out as this rolls out in future quarter earnings. Don't know if it's going to come out right away. So, but third quarter, we still got some time left. We're just getting through second quarter earnings. We don't have the end of the third quarter till October. So here you have it. All right, so that's the deal. I know I still owe us all my big picture outlook, and I will get that done. I wanted to start it today, didn't get around to it. I do apologize. Here it is for today, and our next update will be on Monday, the 8th.